The importance of the commodities market to the Hong Kong Exchange, clearly demonstrated by the growth of this event, started just 3 years ago, and now today we have record attendances for the seminar. The dinner tonight is a sellout. Our clients have around 20 other meetings and seminars and cocktail parties and whatever on top of that. It's so popular that yesterday we had a lunch for our Asian clients, including clients from the mainland, from Hong Kong, from Japan and other areas. And we're enjoying lunch, and 1 or 2 seats were waiting for latecomers. And somebody walked in from outside, came into the room, a tall gentleman. He walked in as though he should belong there. He came in, he sat down, he handed out his business cards, and everyone was looking at him thinking, I don't know this guy. And the people next to him said, his name is a lady's name on the card, it wasn't him. So everyone was looking around to see where this guy was going. And he'd handed out his business cards. It was about 10 minutes later, when he started eating the food, everyone realized he was in the wrong room. He actually shouldn't have been there at all, but he was so attracted to be in there. He was actually an equities fund manager from Holland who'd come to a completely different meeting, but was so interested in meeting all the other guys in the room that he came in, ate part of the lunch, and then at one point he just stood up and walked out. So it's very popular. There are really hot tickets to what we're trying to do. At the end of the day, an exchange, a particular commodities exchange, has a number of important features. And I think the first one is clearly that we have to demonstrate deep liquidity pools so that people can transfer risk. The normal course of the physical markets has to transfer risk as part of their normal business. And at the same time that is happening, they have to transfer their risk on a price and a settlement price that is a reference price, is credible and trusted. And if nothing else, the exchange has to have that credible global reference price. And I think that's an important thing for us to do. We also have to be totally transparent in what we have, and we also have to be totally transparent on positions on the exchange in terms of the general directions. Clearly not day to day, it's all anonymous trading, but really from people observing the market, we're not trying to hide what's going on. In fact, we think it adds value to reassure the market that the exchange is being used for the correct process. So for the LME itself, these 3 things, the deep liquidity pool, the reference price, and the transparency are very important in what we're doing. Okay, this is not LME technology, I just want to make that quite clear. But something's wrong with the clicker, it's not moving forward. It just is moving forward now, okay. So, as we go forward in time, we must continue to maintain the reference price and ensure that the way we settle that reference price, which for our metals is in the ring that you saw on the video just now, meets the regulatory standards and meets the standards of IOSCO, which is the regulator's regulator, the process that governs the formation. And this is what we are spending a lot of time on. We also spending a lot of time on warehouse reform, because as we mentioned earlier, the physical delivery of the underlying commodity is very important as well, and we have to ensure that there is convergence between the price at the delivery date, and that all makes sense as well. We also have to develop products that are fit for the industry themselves. It's not a case of an exchange just dreaming up new products. It has to do significant research before it brings new products to market. And I think the old mentality of a number of exchanges of build it and they will come has long since gone. And I think you have to put a lot of time and effort. Because don't forget, it takes between 9 months and a year to launch any new product. And when I see in the press sometimes comments that, this has started and it's taking a long time and they've announced this and where is it? You cannot just flick a switch and turn a market on. And I think a lot of the issues that Charles was talking about the internationalization of China, it takes time, process, and particularly if it's groundbreaking, you have to make sure you get it right first time. You don't have a time to make a mistake. So from that perspective, product development is very important. And the other thing is, I think as the central liquidity provider for the world metal markets, we do have an obligation to be a spokesman for the industry. And we are speaking all the time with regulators, with politicians, and with people in the industry to further the open markets and the open market trading. Don't forget, trading is not a dirty word. You do need trading and liquidity provision to ensure that people can transfer risk. And with all the regulatory changes in USA, in Europe, and in Asia, we have to be on top of that, and we think that's pretty important from our perspective. We also have to encourage a broad range of market participation, and I think it's important that we recognize there are different players, certainly in the physical metals value chain, all the way from producers to smelters to fabricators to recyclers to consumers and the merchants and broker-dealers in the middle. The more people that participate in a particular market, the better. So one of our overriding goals as well is to encourage participation from the physical market initially, but also we have to look at the opportunities for investing in the market from the financial market players, because base metals, unfortunately, are still very underrepresented in most portfolio and asset managers' portfolios. So the regulatory requirement I mentioned earlier is ongoing, and that takes a lot of our time, but that is in parallel with our products and our business initiatives, and that's sort of how we look at it in general. So all these 7 things that I mentioned there, very important to the priorities we set at the moment. Now, as already been mentioned, particularly focused on Asia. Now, this is driven really from the industry. Look, the production and consumption of base metals is in the majority now in Asia. So for production, consumption, and hedging, and investing, the importance of China, Hong Kong, Singapore, Korea, Japan, Indonesia, Malaysia, Australia, these are all growing economies, very important in our market. And although the LME is based in London, which from a time zone perspective is interesting, from a legal and from a structural performance is interesting, and our goal is to mirror and to link together the cash flows from the East and the West, and that is driven largely by the growth in the East. If you look at the aluminium production and consumption numbers, you can see here in bold the importance and the growing importance of countries in Asia. Obviously driven by China, but there are other important ones as well. And you can see that over time, those numbers are going to grow. If we'd written this about 10 years ago, it would look very different, with the Asian numbers being much smaller. So the momentum is clearly with Asia at this time. If we look at the same thing for copper, the figures are not that different. And I think the interesting thing there is that the consumption of copper is probably the most linked to the real economy in the sense of the users of copper. And you can see again that economies that are growing the most will have a copper consumption that is in proportion to that. And of course, people often focus at the moment on the slowing of growth in China. However, it depends on the base. If China slows a little bit, the growth year on year is still bigger than anywhere else in the world. So the actual quanta of the number and the growth is still very important and significant from that perspective. Now, as already been mentioned by Charles, Hong Kong's position in all of this as a conduit between East and West is very, very important. And I think not to dwell on this again, but it's very important to start to look at markets where Western clients trade on Western exchanges, Chinese clients trading on Chinese exchanges. Can we bring the two together? And we think it's not can we, the question is how can we take part in something that has already happened? We're not inventing this is nothing new. I think we're best placed perhaps to play a bigger role in this. And you may say, well, the LME and the Hong Kong Exchange, how do they link together? Well, at the end of the day, it's all the same company. We're very closely aligned on our management, our structure, our planning, our business, etc. And the Hong Kong Exchange's purchase of the LME in 2012 took some people by surprise, but if you think about where the important growth is in the world in this business, it's not a surprise at all. And in fact, every single initiative that we've put forward and we've developed has been supported by the Hong Kong Exchange, and you can see the results, say, in the first quarter and ongoing. But we're fairly, we're not thinking that it's all over. There's a long way to go. We're at phase 1 of 10. But if over time we can move more Western clients into Asian markets and vice versa, particularly in the commodity markets, we can make a real difference. And in fact, we announced yesterday a market data situation where we're going to launch the LME pricing app, which is available to anybody over their mobile phone, in Chinese for free to the market as a whole. So for delayed data, because obviously market professionals want data real time with sophisticated systems, I'm not talking about that, that's already there and there's a market data process to go through for that. But the LME app in pricing is now available in Chinese, and we're trying to continue the consciousness and the profile of the LME price in a much wider audience. So we think that's quite an important development. And I think that if we look over time, how this development may come and how the build and the connect, as Charles said earlier, this will take some time. It is in process, but clearly behind that of equities. Why? Because the equity markets are more similar in nature, and so they're easier to put together from that perspective. Each commodity contract is a defined contract, and clearly it's not as easy just to link things that are by their nature different. But I think from that perspective, it does take time to make that happen. But I would say what we're seeing at the moment is a significant increase in Chinese participation on the LME. We have a number of Chinese members already. Chinese clients tend to be the larger clients of many of our members. A number of the current members are in process of doing partnerships or deals with Chinese companies to acquire their businesses, and we think this is further important. And of course, if we can then introduce a whole wide range of users through those new members, that's important as well. So I think it's very important that we link those markets, and I can see that the momentum is there for that to happen. In terms of product development, so the LME was an exchange that was run by its members, essentially a not-for-profit organization. It's now become a commercial organization. We've built our own clearinghouse with great success. We've insourced our IT. We've upgraded all of our support functions. So now we've strengthened the house and the machines. What can we put through it? We need to look at more products to put through it, because it's expensive for people to connect to an exchange. So if you can offer them a wider range of markets to trade, then it makes sense. A lot of discussion in the aluminium market about premiums. Now you can see there's a lot of fuss about how premiums, both in Asia, North America, Midwest in particular, Northern Europe and Japan, were growing considerably last year, causing dislocations in the market. It's all to do with the LME. Everyone was saying, you know, this is the problem, it's the LME rules, it's this, it's that. We had a court case, which of course we won, but essentially it was the LME's fault. This year, all these premiums collapse, and you can see the numbers, they're going back to levels before, and of course it's now nothing to do with us. So from that perspective, I'm sure the truth is somewhere in the middle there. But we have decided that we're going to launch aluminium premium contracts to allow people to hedge that specific risk of premiums moving. And of course, when the market was its high with premiums, people were saying, well, why are you launching this contract? You know, they're already very high, no one's going to want to hedge. Now, of course, you've had a significant move down. It's like saying, well, why do I need insurance? Well, we've just had the flood. Well, the terror of having the flood probably means that you think about the insurance in the back of your mind for the next event. So there's never an ideal time for launching things, but I think that as part of the natural cycle, we think this was very important in the total cycle of things. We did a lot of market consultation on this, and the copper market said that they didn't really feel there's an appropriate need for this at the moment, so we're not launching it in copper. We'll see how it goes. If there's a development, the market wants us to develop something like this in due course, we will do that. And you can see the four regions there, East Asia, Southeast Asia, Japan, Europe, and North America premium. So this is a very important thing for us later this year. As I say, before we push ahead with these sorts of things, we do significant market engagement. We've had significant dialogue for 6 months globally on this, and we feel that the market results of that survey have led us to want to launch things. We also announced recently that we're going to go forward with the ferrous suite, so looking at particularly steel in the short term and perhaps iron ore and other businesses later on. I can announce today that we have now chosen our index provider for the cash-settled contract. So at the moment, we have the physically delivered billet contract, which is going to be redeveloped with further emphasis and further liquidity providers. We've strengthened the steel committee at the LME, and we will be launching later this year cash-settled contracts in scrap and rebar. And today I can announce to you that we have chosen Platts TSI to be the provider of the indices for both of these markets. This was after a great deal of consultation with the market again to choose the right index. We did an RFP with many providers, and we're going to choose the TSI Turkish Imports HMS 1 and 2 8020 CFR for Iskenderunport as the provider for scrap. Now, for those of you in the steel market, that will make complete sense. For those of you not in the steel market, you've no idea what I just said. In the rebar market, obviously another important part of things, we were using the Platts Rebar Index, free on board Turkish ports. So we will put out a press release on that in due course, but this is quite important. And I think also our recent transaction with Borsa Istanbul, the leading exchange in Turkey, obviously opened by the government, about to do an IPO next year, means that we're going to be partnering with them to see how we can improve the liquidity of the secondary market for steel, and particularly can we try and resolve some of the issues around the warehouse situation in Turkey, which is slightly different than the rest of the world. So pretty important from that perspective. As I say, towards the end of this year, we're looking to launch these contracts and show a further development of the LME business out of just base metals into the ferrous suite. And here again, some of the details on the things I just described. It's important to launch contracts based on indices that people actually use and that people feel are important, because obviously it has credibility in itself. And we're quite happy at all stages of this, in any part of our business, to work with partners, as we're trying to do with China, as already we've discussed, but also industry partners, technology providers, vendors, and others, to have the full range of services. And so we feel today this is an important development. Again, market development on steel, significant market engagement globally, spend a lot of time on the road talking to people about how we develop a market. But at the end of the day, you can get all the participants together, but the underlying driver is liquidity. You have to have liquidity on a market, which means sometimes you have to look to market makers, sometimes you have to look to incentive programs to kick off something initially. And so there's a lot of comments sometimes about how we incentivize new members or new participants to get a market going. And I think it's important not just to, again, build it and they will come, but to have something there, because once liquidity starts, you can see what happens. So again, significant market engagement on this. There's also been a lot of talk about warehouse systems and the credibility and security of warehouse receipts. Now, the LME network, which is around 680 warehouses globally, has an electronic process called LMEsword. And again, I'm happy to announce today that we have now developed with a partner, Kinetics, a technology company in the UK, we've been working with for some time on Sword, for a new program which we're calling Sentinel, which is a warehouse receipts system for global use, in theory for any commodity, which we're going to roll out now with partners in many areas of the world. We're still working on the exact rollout details and everything else, but we're pleased to announce that this system will make the whole process of warehouse storage, the audit and trailing of warehouse receipts much easier to understand and much more useful. A global system, secure and robust. And so we think this, again, is a physical market service that we're looking to expand beyond the pure LME. So what we're talking about here is not LME stocks, we're actually talking about non-LME stocks in metals and perhaps in due course in other markets. This is quite important because people are concerned about liquidity in markets, and in metals, they're concerned about the financing of the underlying positions. And banks will not lend unless they're sure that the metal is in the warehouse, it can be verified, and if you add in an electronic audit and risk system to the LME services in audit and physical visits and warehouse administration, which we have at the moment, the whole thing gets more secure, which means more banks are prepared to lend in the market, which helps liquidity in the market, which helps the development of the market. So this is a very important thing. It's nothing to do with trading. This is all the post-trade environment, but we think of all the things I'm saying today, this is perhaps one of the most important. And Kinetics, as I say, it's a software company we've worked with some time. We're developing a system with there which includes revenue share with them. So we are quite prepared again to share both risk and reward with partners to take something forward. So more about that in due course, but I think from the perspective of a useful service to the market, which will certainly enhance things, we think this makes a lot of sense. Precious metals. It's been said for some time the LME, London Metal Exchange, should be more than just base metals. I've already discussed what we're trying to do in the ferrous metals side. What are we doing in precious metals? Well, we are now the world's reference price for platinum palladium. We started that in December 2014. So all the world's platinum and palladium prices, a daily reference price period is set through the LME. We're looking in due course to add a range of products around clearing and potentially trading for the complete precious metals suite. And again, the kind of clients that we have and members are already the kind of players that are active in that market. There's some discussion going on in the market exactly what the right market structure is, and there are various stakeholders that we need to discuss with before we go a little further. But essentially, we are very much squarely focused on the precious metals market. The bullion market itself in London has a number of issues that it's looking at. Around the date structure, clearly it's more of a spot market than a forward market. It's not a cleared market at the moment. And how is the external focus in terms of access to the market achievable through the current structure? So these are the discussions going on right now. We're in the middle of those discussions, but I hope in due course we can come back by next year and tell you, what we're doing and how we're going to do it. Because this, again, is another area of growth. And particularly the interest in precious metals in Asia means that this could be the European leg or a global leg based in Europe that could link in with an important markets in Asia. Warehouse reform. There's a lot of discussion about warehouses. I'm not going to dwell on that too much today for this audience. Essentially, though, we did lay out a program of changes we were going to make. We were held up a little bit in the courts, but I'm now pleased that we're pushing ahead with that. We're about to announce the results of a recent discussion paper we put out. And, of course, with all of these things, it's a balance between not interfering with market protocol and practices unless there are things in the market that are doing just that. So, again, we operate with a license from a regulator. We have to ensure our markets are stable, clear, transparent, open access, and that our prices bear relevant to what people are trying to hedge. So if there's significant divergences from that, it's our responsibility to take some action. And so as a result of the first consultation, we brought in the LILO rules. They were delayed for a while, but now they're in place. We're now looking to take perhaps further steps. And of course, there's significant regulatory pressure, both from our own regulator, the FCA, the European regulators, the CFTC, and others, to take care of this. So we're fully focused on this. It's been an ongoing thing, but we'll be announcing our results of the discussion paper shortly and what action we intend to take there as well. We're quite pleased that since we brought in the rules, the LILO rules, and indeed before they were even in place, that you started to see general destocking from warehouses and reductions in incentive payments and process. You can see some of the scale there. But the most important slide, and you probably can't see that at the back, all you need to know is there's a big hump in the middle and it comes down the other side, which shows that the premiums in the aluminium market are already reacting to the potential rule changes we may make and the ones that we have. And you can see here that we're now back to levels where we were a year and a half ago, which is not to say the problem doesn't go away, my insurance and flood analogy earlier. But essentially, this is significant movement. And why? It's predominantly to do with supply and demand. Of course, markets are always driven at the end of the day by supply and demand, not the exchange rules. They are determined by supply and demand. And you can see that this market is already getting back to a normal cycle, although obviously the prediction of the amplitude of that cycle is sometimes difficult to determine. I mentioned enhanced participation earlier on. We are trying, as I say, to broaden the participation into the market. We do already extend our coverage from the miner all the way to the consumer, and we try to also look at the provision of liquidity from players in the market who can add to the strength and depth of that market. Physical markets is the root of the LME, but there are also significant asset managers, I've mentioned before, across the board, who invest in our markets, and there are also financial markets players who also participate. You can see how much they participate by looking at the commitment of trade report each month that we publish. In fact, it's done each day, comes out weekly, but the monthly one is the one people tend to focus on. And so as we look towards markets going forward, we must maintain the prompt date structure for the physical market, but we must also recognize that the prompt date structure tends to focus the open interest on what we call the third Wednesday dates, the dates each month that are the third Wednesday of the month, more analogous to futures, if you like. So from that perspective, we're aware that there's a secondary market with a number of clients to their clients quoting the LME third Wednesday lookalike contracts. So we're going to try and enhance the exchange trading of those dates alongside the prompt date structure as well. And we'll be announcing incentive programs in due course, both for the 3-month contract and for the third Wednesday contract. So we're trying to look at the underlying core contracts that everyone else is priced off and try and encourage new participants to the market in that way. And this just shows where that open interest sits. It's amazing that 60% of the open interest sits in a different place than where the day-to-day trading takes place. This tells you quite a lot, I think, and why we feel that we need to balance the open interest and traded volume for the different dates in due course. And this roadmap we've discussed really starts to look at how we will encourage liquidity both for the third Wednesday and the 3-month, how we will optimize this. We have already changed the order to trade ratio and the tick size to make it easier for participants to trade. We will also offer programs where people can get rebates, or indeed if they're new players, can get incentive programs to encourage them to trade our markets for the first time. We also think it's important for the options market, because options market makers need a standard contract with a defined date to delta hedge their portfolio, and a moving 3-month date doesn't give them that. So again, all these changes have been discussed with the LME's committees. We have about 14 committees made up of industry participation, and particularly the options and the trading market committees have sort of verified what we're looking at in this regard. So this is something we're putting in place right now. It will be an ongoing program. It is a roadmap rather than a one-off thing. There's no launch associated with this, and it'll go out into 2016. So again, these are changes and a roadmap as opposed to a launch of something that isn't there at the moment. It was touched on earlier in Charles's speech about our Hong Kong business. Obviously, starting a market from scratch, very difficult. We launched, if you remember, in December in the mini contracts in Hong Kong. Clearly, December is not the best month to launch, but there were some regulatory delays around the launch date. But here we are. We started low volumes to start with, as with all contracts. If you look at the history of market development of any exchange in the world, there are long periods of batting down, gaining liquidity, gaining support, but we remain confident that this will work in due course. And I think the other thing that the Hong Kong Exchange has done recently is to further strengthen our mainland team. We now have a new division, the mainland division, which is headed by Mao Zhirong and Li Gang, is going to be the central focus of all of our efforts, including commodities, into mainland China, Hong Kong, Taiwan, the whole group. And we think this will further give some impetus to this market and also act as an important bridgehead for marketing the LME in this area as well. So I think they're the important things that we're looking at in Hong Kong. Hong Kong will take time to become a commodities market because, let's face it, it's never been that before. And you can't just change something overnight. And you know, the amount of time it took us to get Connect up and running, and then the doubters and the discussions about whether that would work, and clearly evidence of fantastic success since the launch. You know, you have to stick with this for the medium term, and we clearly believe that is going to be the case. I think also, you know, for the LME itself, it is a transition from a member-owned semi-mutual to a commercial company. I think we're well into that transition. Later this year and early next year, we'll be moving into a new building in London where we will put everything together. And the designers for this building, when we were looking at what we were doing, were given 3 design concepts. One was to marry the history of the exchange, the heritage, with a modern feel. One was to have a one-company feel to pull everything together with clearing technology and the Hong Kong Exchange. And the third one was to have a high-tech focus on what we're doing. And I thought that the underlying design concepts for the building really do level with our philosophy of what we're trying to do at the same time. And clearly that will also be the London headquarters for the Hong Kong Exchange as well, and we'll promote it as such, so watch this space. I think when LME Week in London happens later this year, we'll be in a position to share with everybody the new concept there. But it's not about buildings, you know, it's about markets, it's about people, it's providing a service, it's providing something that is needed in the market. And I'll just finish by saying that the number one objective of an exchange, any exchange, but particularly LME, is to maintain deep liquidity pools for risk transfer. It's also very important that the reference price of what you're trading is seen as being credible. And thirdly, that your markets are transparent, properly regulated, and have ongoing dialogue with all stakeholders. So from that perspective, I think the future looks very bright. We're very pleased with our achievements so far, but not complacent. And I wish you well for the rest of the week. Thank you very much for your attention. Thank you.